Good day, everyone. Ali Safi here, Safi Financial Network, August 18, 2025. All right, market was very boring today just because everyone is waiting for the negotiation result in White House, and everyone is just eyeing on that sessions today. So we'll see how it goes for the next few weeks. I don't think it's going to resolve very fast, but seems like there were very kind of like a tough sessions actually they had in White House as well. So lots of European leaders and Zelensky, President Trump was there, and they had lots of negotiations. So that's why market kind of like was very boring today. We got Doji bar on S&P 500. We are pretty close to new all-time high. We just got new all-time high on Friday, getting back to the downside. And I would say technically market is very overbought. And anyway, if you want to slice it and dice it, you see that market is just creeping higher. And getting into the long position right now, it's kind of like a risky. It doesn't mean that market can't go higher. I would say it's very risky. The best risk to reward that you can see is market giving us a chance for 5 to 10% correction to the downside, potentially to 5,900 to 6,000. That's the level that I'm looking for a long position. It doesn't mean that I'm selling all my long position. No, I have all my long positions still. They are there. I'm not going to touch it just because for the longer term, even with this correction, if that happens, I'm very bullish. I'm still bullish on the market until 7,000. So that's going to be my target for a year and or even next year. So that's the area that I'm looking at, 7,000, 6,900, 7,000. That's going to be kind of like the minimal target that they have for the market. Right now, getting to the market just for 7,000, it's kind of like a risky. So I'm kind of like raising my cash, allocating on the side, waiting for this corrective move. That happens, potentially it's going to happen in September, October maybe, which is a seasonally is kind of like the buying opportunity for the market. And market is always looking for excuse, like a fundamental reason or kind of like a geopolitical tensions or whatever. Market is just looking for excuse to give us some kind of like a buying opportunity or corrective move to the downside. And that would be the perfect scenario if we get kind of like a correction in the next few weeks or months to 5,900, 6,000. The reason that I'm insisting on this level is this institutional level breakout. So look at this wide range bar here and market just poising all the way up to new all-time high. And this is kind of like the bull flag that we tested once. And here is the nice divergence here between price and RSI here. If you just look at the daily chart. So this is RSI. You see that here's the top in July. And this is the recent top in August. Look at that huge divergence here. And also we break down this low here. So this means a market is easily can shake out to the downside, and that would be a very nice high volume reversal. So these two actually high volume reversal to the downside prove me that institutional um, traders or investors kind of like got involved and they already kind of like a sold off their position. So we'll see how it goes for the market. Moving on to Nasdaq. Nasdaq is the same. It's kind of like a very boring for Nasdaq. You see that last 4 or 5 days, it doesn't move at all. So it's kind of like seems like a bullish consolidation, but we will see. Potentially, we are going to see some kind of like a pop or even drop to the downside. Either case, I'm just waiting for a correction. Again, this is kind of like the trend line that I'm looking at. If we break through to the downside, Nasdaq 2100 is coming, and I believe that this is the area that looking for Nasdaq. So seems like this area, this institutional level, which is gonna be about 21,000, 21,400. That's the area that I'm looking at for a great buying opportunity. So far, I'm just staying on the side. As I said, long positions are there, slightly getting into short positions and adding to my SQQ position, but it's very minimal, less than 2% right now. I may add more if I get more confirmation. So right now, I'm just sitting on the side and raise our cash allocation as well. So we'll see. Dow is heading to new all-time high last week, but this week we just got a kind of like a very doji bar, and this forms a consolidation here. So We will see. We will see for Dow. I would say if money is flowing into Dow Jones, which is going to be heavy value names, banks actually did very well today. However, I would say banks are kind of like in a dangerous pattern. Still, the head and shoulder pattern for some of them are valid. So Dow could be kind of like the area that outperformed the market for the next few months. Money flowing out from technology going into heavy value names, going into dividend payers like a Lockheed Martin, Goldman Sachs, and United Health recently got attention. And well, we'll see how it goes with Dow Jones. I would say Dow can perform better for the market. Um, Gold, this is 4 hours chart for or gold, or let me just yeah, this is hourly, but 4 hours chart. So I would say gold is forming the base here for the next rally. So we'll see. It depends on the bond yield. It depends on the treasuries as well. So and also geopolitical tensions. Everyone is eyeing on de-escalation. So if that de-escalation happens, potentially it's going to put pressure on gold for a short term. But if that de-escalation doesn't kind of like satisfy the market, market is going to price up for gold as well. So we will see. And also Jackson Hole Symposium is just right around the corner, end of the August, and everyone is looking for that one as well because that's going to kind of like give us a green light for the rate cut in September or what's going to be the rate cut or monetary policy down the road, especially when Jerome Powell is going to talk about, and he is under pressure of President Trump as well for the rate cut recently. Moving on to silver. Silver is down today, and it's forming a bullish consolidation right now. And we will see if a silver breaking through to the upside, we need to take out this high, this $40 high, because as soon as it takes out this, 42 to 44 is coming down the road. Silver is going to be very fast, but a consolidation is going to be boring. But when it spikes to the higher price, it's already late to catch up with. So just be mindful with that one because the silver is kind of like very, very boring in consolidation, very spiky in the move. So just be mindful with that one. Moving on to crude. Crude is again another one due to geopolitical tensions, but all indicators actually are telling me crude is bottom. So seems like the escalation is not gonna be that fast. So here is the bull reversal. MACD is just sloping up. RSI is getting into kind of like oversold condition and forming the bottom. So we will see. We have got support here for the 60 to 63. If this level take out to the downside, we're gonna test this area, even 53 to 50 dollar per barrel. But if it reverse back up, I would say crude is forming a multi-month bottom here. Even if it goes down, that's going to be the multi-month bottom because ultimately from here to here or even downside, then upside, crude is eyeing for 80 to 83. So we will see how it goes with that one. But I'm still bullish crude for the longer term. Short term, we may see some kind of like a volatility down the road. All right, folks, this is going to be a short episode. We will get to the longer one tomorrow, and we will see how it goes with the market. Have a fantastic evening. See you on the chart. Bye-bye.